today our schedule is to discuss the rooms division expenses, and yesterday we covered the. So as per usually, you will see the expenses are divided into two parts. One is labor cost, and then the another other cost, right? Other expenses. So labor cost is further divided into salaries and wages plus the payroll related expenses. So two major aspects of it: salary, wages, and payroll related. Where the salary and wages includes the basic salary. It includes the contract labor. So we're gonna look at these definitions one by one very quickly, and then we will be seeing how we actually account for and define the chart of accounts for our expenses. So salary wages it includes the both the permanent labor and also the overtime shift differential contract staff if they are processed through the payroll system of the hotel. So if there is a contract staff which the hotel has hired, but it's paid to a third party contractor first, because maybe they have a contract where they are providing the material and also the labor, then the cost would go to the contract labor cost. But otherwise, the if it's done to the payroll system, let's say you hire a person for 3 months, 4 months, or it's a casual labor, then it will go through the salary and wages. So you have to separate these regular pays, overtime, shift differential, and contract, so that you can separate it out. And then it also need to be segregated into the specific lines which for to record the expenses, which includes the management and non-management fees. So the management will include usually your director of rooms, front office manager, duty manager, concierge manager, guest relations manager. Whatever is the manager and assistant manager titles will go under the management. The non-management are supervisory staff and below, who are usually taking care of the guest directly. So they are in a direct guest contact. So usually it will be segregated into complimentary F&B if the hotel has like a lounge, which is providing the breakfast or the other evening snacks in the lounge. Usually, many hotels have standards, like Shangri-La has Horizon Club Lounge, Marriott has their own lounge, where the premium guests are going and having their breakfast and afternoon snacks or all day tea and coffee for free, right? So that is the complimentary F&B service. Otherwise, in the lobby also, you may be providing a specific staff for welcome drinks, or the in the lobby, if let's say the hotel is providing any F&B services, then that will also be part of the this complimentary F&B labor cost, non-management. Then front office usually will be your receptionist, your GROs, your back office staff, room controllers and everything. The guest services again would be your GSAs, or the guest relations managers or guest relation officers, who will be taking care of, or the lobby ambassadors. Then housekeeping again would be the room attendants, public area, and all those staff which are non-managerial. Laundry department. The laundry department usually in many hotels will be a separate department, where they are, if they are serving the outside guest laundry as well, then laundry department will not be a part of the room division. But many hotels, the laundry is inclusive as a part of the cost center into the rooms division, so laundry will be separated here. And you have reservations. So reservations department usually will be coming here, because the reservations job is mostly for rooms only. So even though reservation department is controlled by the sales and marketing and revenue management, but the cost is um, charged to the rooms department. Then you have transportation, limousine, or the concierge services, right? So these are the mostly uh, uh, non-management categorization. But when you are talking about the management, if you have, let's say it's a small hotel, you have only one director of rooms or one front office manager, you may not want to put him separately in the management, because otherwise his payroll confidentiality will be gone. Everybody would be able to see what he is being paid, because of the management cost is separately spread it out. If there are two, three people, then you can combine and put it there. So the confidentiality is not going to be missing. So means you need to have separate account codes for capturing the management and non-management basic pays, overtimes which you are paying to them, the supplementary pay that you are paying to them, the contract labor which is also put into the separate. So you need to record them separately in your book, in your chart of accounts. So usually you have in the major chart of account, you may have a labor, salary and wages as a main accounting head, and then you may have sub accounts, right, the sub ledgers. So you might be already aware of the concept of main ledger, then sub ledger, and then the cost center wise, right? So you may have to record it in a main ledger and then the sub ledgers, so that you can get the details. Or you can create individual ledger accounts for each of the departments, so that you can capture the details in a easy way. Then you have the service charge distribution, as we discussed yesterday. Many hotels which are hotels which records the service charge as an income will also record the service charge distribution as expense whenever they are paying to the staff, and it should be the actual one what you are paying, or what you are retaining out of your to recover your damages. Then the contract, lease, and outsourced labor is the contract labor which is not processed through the payroll system of the hotel, but is a part of the contract. For example, you have security contracts, right? In the security contract, you may say that the person is gonna come, and with the company will be providing the materials, i.e., the wands, the uniforms, the walkthrough machines, or whatever equipments related with the security are going to be provided by the security company. But the whole contract will not go as a part of your labor cost. You have to split the cost between the non-labor and material of each contract, wherever it's involved heavily of the labor. So it can be room cleaning services, it can be the security services, or it can be any other services. So you have to split out. If you have to ask the supplier how much is it, and then you have to separate it out and put into the expense where it should go, right? So in rooms division, it will not be security that is going to be in this contract. Security is a part of your administration and general. For rooms, it will be the public area cleaning, it will be the glass cleaning, it will be the high ceilings, it will be any other cost, or maybe a carpet cleaning company that you have hired. So those companies will come with their equipment, will come there with their chemicals, they will clean the hotel and go back. So is in that case, not entire contract will go into the cleaning cost. The major part of it will go to the labor, because it's a labor intensive job. So you have to separate out the material and the labor if it's readily available in the contract. If it's not, you have to estimate that, right? Then the next line is bonus and incentives. So the bonus and incentives, usually you are giving the front office the upselling incentive. So in even though it's a complete one line here, you may need to have a separate lines in your ledger accounts, so that you can track it separately. What are the expenses on bonus? What are the expenses on incentive? If it's an upselling incentive or a reservation incentive or the other type of incentives, so that you can compare month on month or year what is the differences, what are the reasons why the bonus or incentive, if it's line. So every line you may need to have either a sub ledger, or you need to maintain the details outside the ledger, means in an excel file somewhere, so that you can get the details of the expenses for future purposes. Right, and then you will have your total salary and wages, so that's the total. And then you have payroll related expenses, which includes the payroll tax, which we have discussed in the video in detail. And it will include your it will include the payroll tax, the gross up tax, the certain percentage of the payroll that you have to pay to the government as a part of your benefit. So it's not an employee benefit, it's the tax to be paid to the government for employee. So that will go go here. Supplemental pay will include your vacations, your gratuities, extra payment which is accumulated over a period of time. So that will be supplemental pay. And then it's an employee benefit. So the in-kind benefits that you are providing to the staff, which can be your meals, can be your accommodation, can be your social security benefit, health insurance, life insurance. Those all are part of your employee benefits. So in the book, in the course, you will find this PDF where you have the details of the line items, each line item, which is specifically separating out the total cost. So you will be able to see what are the costs that are included here, and then you will be able to create the line chart of accounts based on this, right? The next, other than the labor, so here in this labor cost, you also have as a chief, as a finance manager or as a chief accountant, you also need to understand the behavior of this labor cost. Is it variable or is it fixed? If it's variable, how is it moving? Is it moving according to the guest? Is it moving according to the season? Is it moving according to the occupancy? If occupancy, what is the relationship with the increasing the room nights and the increasing the cost? So you have to establish that, so that whenever you are doing the budgets or forecast in the future, you understand how the costs are behaving, so you will be able to make accurate forecast based on the number of business. So, and then another part of the labor is the labor productivity reports. So even though it's not a part of the curriculum, but just to explain you, uh, you might be hearing about the labor productivity means the how many rooms are cleaned by housekeeping staff, how many check-ins are done by front office staff, how many guest services are handled by operators, how many guest requests are handled by the concierge staff or by the transport staff, how many airport pickup and drop or any other kilometers that they are running. So you need to see what is the productivity of each staff, each type of labor, so that you can, in the future, you can work on the future expenses based on the estimated amount of business. Yeah, okay. Many hotels have this kind of report uh, where they are measuring the productivity of each staff, where so they are establishing the productivity systems, means they were gonna check out, they're gonna keep a record of how many check-ins is done, how many checkouts is done, how many guest requests, how many emails reservation staff is handling, how many calls, how many fax, and then they will be looking at how many bookings or how many reservations are being done by the reservation staff on average per person, right? So then they will be able to compare it against the other benchmarks from the other hotels and see, are we in line with the international standards or not? And second thing is, are we, or year on a year, are we able to improve our productivity by trainings, by installing new systems, by implementing the technologies or anything else, right? So that's another important aspect of hotel finance nowadays. Well, is computed usually with the combination of HR and finance. So the HR would so there are two parts of this report. One is the production, means the number of check-in, number of checkouts, and all those kind of things. So usually that data will come from operations. So what happens is, like in my hotel, when I implemented this report, our finance was the collector of the collector of the report, means we would collect all the data. So the employee data would come from HR, means the FTE would come from HR. So we would say how many were permanent, how many leaves, how many were the leave without pay, or what was the FTE, right? And then we would ask each of the departments to give their production report. So we would ask sales and marketing how many reservations are done. We would ask front office how many check-in, check-out, how many guest requests, how many housekeeping. We would ask how many rooms they clean, how many turn down they do, how many amenity setup they did, how many all those different kind of productivity measures that we define, right? And then we would use those defined to you will use those tools to match with the FTE and combine them to calculate a productivity per person, per FTE. So we would say how many rooms are cleaned per FTE. So let's say if it's 10 or 20, 12 or 13, and then we would see what is the standard, what are the credits. So that will help us to identify whether our allocation, whether our rostering was enough or good or
Mhm.
not, right? As per the changing dynamics. So we would apply that kind of report. Well, you can measure the individual basis as well, but then as you said, it's a too much of data, right? And the benefits are not that really great because it depends on many factors. Then there will be all blames and everything is coming around and why the productivity is high, why the productivity is low, right? So
Mhm.
it's better. So normally when we implemented a labor productivity we report, we identified what would be easier to maintain and what will be the most effective for us, because it's a cost and benefit. All these internal controls comes with a cost of implementing it. So you may need to have a system, you may need to implement the fingerprints at every area if you want to measure it. So it's a very complicated task. So we decided what kind of productivity measures we want to measure, and what matters to us and what we can do without adding to too much of cost. Because even if we are able to measure, what would be save basically? So we won't save much. That's why we measure the average for the per person. First, we measure the average, and if there is any discrepancy, then definitely the department can go down into the details by looking at their rosters. That who specific department is, let's say the productivity is low in certain months, right? So they can go back to their rostering and see which person performed the least, because they have the data of actual rooms cleaned by each and every person. So they can definitely calculate the productivity per person actual by that individual. But that is required only when there is a problem. Otherwise, you may not need to do that actually.
Got you, sir. Got you. Thank you.
Okay, so that was the labor, recording the labor cost and also understanding the labor productivity report. Then the next is the other expenses. So the other expenses are pretty straightforward. You have your definitions, which is written very clearly. So you just have to make sure that you're following the definitions. For example, the cleaning supplies, it includes the cost of cleaning, sweeping, polishing, waxing, disinfecting. The only thing which I would like to emphasize here is the detailing of your expenses. So when you are designing your chart of accounts for, let's say, because you have a um, clear line item that you need to produce. So it's very easy for you to say, okay, I need to have one chart, one account code, which is going to be cleaning and supplies. That's clear enough. But you have to understand your own business and see that how the cleaning expenses are built up, right? So it may include chemical, it may include equipment, it may include contract services, it may include the any other thing that you have. So you have to have certain sub accounts so that you can actually record the expenses in a deeper details, so that in the future when you are going to analyze the expenses, it's easier for you. So cleaning supplies can be, you have a contracted services, means you may be contracting out certain services, and you may be doing it all in-house by yourself. So the labor cost will go to the labor, but the other expenses for chemicals, for equipments, for material, repairs, that will be still part of your daily expenses. So they are all variable expense, right? So you may have to record them separately, either in the Excel file if you don't want to create sub ledgers, or your accounting system does not allow you to create sub ledgers. Otherwise, you can create sub ledgers so that it's there. You don't have to rely on the Excel files. So that's the important thing that I wanted to say. The cluster services are pretty simple. If Foodle is a part of a cluster, there are certain things that are done at the cluster level. So you may be sharing charge of the cluster services. So that may be coming as a part of labor or the other office expenses. Those expenses which are clearly allocated, it will be which will be charged to the individual departments, for example, labor and related expenses. But if it's not clear, then it will be charged to the cluster services. Then you have commission. So commission is paid to travel agents, commission is paid to OTAs, commission is paid to many other departments, right? So as a part of your analysis, you can actually record it also subledger. So where you may have a separate account code for travel agent commission. You may have a separate account for, let's say, booking.com commission. You may have a separate ledger for, you have a separate account code for commission and fees group, that is separate. But the upper commission account is mostly for transient business. So you may be giving a travel agent commission, which is IATA affiliated or non-IATA affiliated, or you may be giving commission to the wholesalers or to the bookers. Sometimes you may pay the commission to the bookers, or it can also be paying to the leases, the commission that you are paying, or to the OTAs, right? So you may want to record them separately. Then you have commission fees for the group to make the group payments. Complimentary food and beverage again is another area which is very messy. If you see the generally the all the most of the cost will go into the complimentary. A lot of cost go into complimentary food and beverage. So, but you definitely want to separate to understand separately what is the cost of my breakfast, what is the cost of my beverages, what is the cost of my food, what is the cost of my gratis, what I am giving as a part of my F&B. In the lounge or anywhere else, right? So the many of these costs come from the cost control department as a part of your allocations, right? So you may be getting the orders. So as a part of your details, let's say for the operations department or the front office manager would keep a record of what they are recording, what they are actually requesting from the kitchen, so that they can get the costing correctly. So usually there is at the end of the month there is always a bit of fighting. If the cost of food and beverage is higher or lower, then the front office manager would go and look into the actual data, what they have been requesting, how it has been costed, what kind of items they are requesting. So usually it's better to keep a details at the cost controller so that they can explain it. But for accounting purposes, for to provide the data, clear data in the future, you may want to create a separate you may want to create separate details, because just only one ledger account. Otherwise, in the future, you may not know what was the cost of breakfast, what was the cost of evening snacks, or what was the cost that you are giving away as a part of your um, a- complimentary benefits. So it includes the complimentary coffee, tea as well. Now, complimentary in-room media is mostly the TV channels or cable TV rooms. It's a part of your fixed cost unless you have contracting out with the travel with the TV media to pay based on the occupancy. Complimentary services and gifts again is very messy account usually, where everything which is not which is part of the guest is going right. So it can be the gifts, it can be the flowers, it can be the fruit basket, it can be the amenities. So those are all complimentary services and gifts. Then you have contracted services. Contract services are where this contract service is the same as you saw in the labor cost. So here you will be including the only the material part of it, not the labor part of it. So labor part will go to the labor cost, but the material part will come here. Uh, then you have decorations. Corporate office reimbursable is a simple thing. It depends on your corporate office what they are charging. They will be charging for traveling. They may be charging for the management audit. They may be charging for the regional operations guys, regional finance guys. So in this particular department, it will be only the if there's a regional front office manager or regional housekeeping manager uh, coming from the corporate office and visiting your property. So they will be charged for those things. Then you have decorations, as usually the decorations of the rooms department in the lobby, in the public area, inside the guest rooms. Inside the guest rooms, flowers will be part of your complimentary services. So it's not a part of decoration. Only the public area is the which is going to be the indoor decoration. So public area and the lobby. So it can be fresh flowers or it can also be the reusable flowers, right? So it can be both. Then you have dues and subscription for your in-house magazine or any other thing. Entertainment in-house is your cost of food and beverage which you are consuming for and in entertaining the guest or business clients. From rooms department, not from other departments. So if the rooms department is entertaining, then the cost will go here. But if the other department is entertaining, then the cost will go to those particular departments. Then you have equipment rental if you are borrowing the equipments. Here, you sometimes have the confusion that the equipment on a long-term lease would go as a part of the other property and equipment rental, because usually the it's a part of the owner's cost, especially where you have the property which is operated by non-owners, right? Like Marriott or Ritz-Carlton or any other brand. And let's say the property does not have invested into the vacuum cleaners, right? So vacuum cleaners are rented out. If let's say all the vacuum cleaners are a few vacuum cleaners are damaged in a month for a month. If you are just renting it out for a month only, or because of high occupancy or because of damage, then the cost will go here. But if it's a regular practice, let's say the hotel has hired 10 vacuum cleaners because the capex is not there and you have not bought your own equipment, but and you are buying it for 1 year, you are renting it for a year or 2 years, then that cost will not be part of your operation cost. That will go as a part of your property and equipment rental below the line, non-operating income and expense. The reason being is because the provide the hotel with the necessary fittings is the job of the owners, is not an operational cost, right? So that's the purpose of keeping it separately. But if it's a short while because of any specific reason of high occupancy or periodically, then it will be in the equipment rental. Then you have guest relocation for walkaway rooms, or for the where you have you pay the other expenses for relocating the guest to another hotel for high occupancies. Then you have guest supplies, which is consumed by the guest. So here you will be putting in all your shampoos, lotions, toilets, sunshine, shower cap, which is actually consumed by the guest, not as a part of your of complimentary services and gift. It's usually consumed by the guest as a part of your amenities, right? As a part of your standard benefits, brand requiring. Then the guest transportation is your airport transfer if you are providing it for free to the cost. So it may include the rental of the buses or the fuel cost, the cost of washing, the and the occasional rent of equipment. Then again, the rental, if it's a fixed thing which is regular, then it will be charging to the property non-operating expense, but otherwise it will be going into the guest transportation. Laundry allocations, we discussed that in great length in the other day. License and permit, linens, and linens are pretty simple, so there's no other thing. That operating supplies you will be putting into your all your in the rooms, your other things, alarm clocks, iron, key cards, which is not a part of amenity, means it's not consumed by the guest, it's used by the guest, so it's not a consumption. But these are the equipments which are not part of your fixed assets as well, because iron clocks, irons, key cards, do not disturb signs, ice buckets, they are not high cost items to put into the capex, but they are low cost items. But it's a part of it's a and you have to replace it quite often because they get damaged after the higher use, right? So the life of these things are not really very high. So even though actual use is maybe higher than 1 year, but usually we assume that for a year. So the operating supplies will be part of your those operating supply costs. This cost is not something which is regular or based on the occupancy. So it's an ad hoc thing, which is usually changed based on certain schedules, right? So you have to be aware of that. Then you have reservations expenses, where sometimes the hotel is paying reservation services to the either the corporate office or to the brand expense or to the brand or to the CRS. There are usually fees. Sometimes it's based on the revenue, sometimes it's based on the booking, sometimes it's a fixed expense. So you may have to just keep the details. Then you have royalty fee, which is part of using your brand. If the hotel is using any other brand, so royalty for using that brand name is going to be here. Then you have training, travel, training expenses to the rooms department, which includes the cost of meals, supplies, certification, instructor fees, and everything else. But the employee salary during the time of training is charged to the labor cost. Then you have the traveling expenses. So traveling expenses are divided into two parts. One is the meal and entertainment, just only meal and entertainment, and the other expenses related to the travel. So the other will include the ticket, the hotel, and the internet and everything else. But the meal and the F&B, meal and entertainment, will go into the separate department. So usually I think the logic behind this is to understand what is spent on the meals and entertainment separately, because that sometimes is quite a major part of the travel and is variable depending on number of people. But the others is include your cost of travel, the hotel and everything else, which is not actually used by the staff, right? Uh, is controlled by the hotel, but the meals and entertainment is used by the staff, is consumed by the staff. So that's a separate cost. Then you have uniforms. Uniforms is the cost of uniform and the cleaning of uniforms. So uniform laundry and uniform cost. The uniform cost usually is the allocation which we discussed last time, that you sometime buy the uniform and amortize over a period of 12 months or 24 months or however. And the renting cost of the uniform and repair cost of the uniform will also be part of your uniform cost. Sometimes you pay design fees, right? So for the uniform, so that cost also will be in the part of your uniform costs allocated to the rooms department. So that's the expenses for the rooms department. So any other type of expense, usually you will there is a line for it called miscellaneous. So you will put anything. Miscellaneous means if there is no other, if there is any expense which does not really fit into any of these fixed lines, then it will go into miscellaneous. So means you cannot create any other new line of account, right? You should not be creating any new line codes. So these line codes are defined, are predefined already. So you cannot increase them. These are the fixed. So you can put them in the same order, or you can put them in any other order, however you want it. So it does not really matter. But the only thing is you cannot change the lines. So you have to keep the same name, same number of lines, but you cannot increase or decrease it. So if anything is there which is you think is not a part of any of these lines, does not fit into the definition, then you put into the miscellaneous. Okay, and then you will calculate the departmental profit. So that's the rooms departmental expenses. And then we have the other operating statistics as a part of your metrics. So you might have seen these statistic report in your daily revenue report, which is saying the revenue mix in terms of the for each room segment. These are the revenue plus the ADR and also the rooms. So you have both all the type of your occupancy statistics by market segment, so that you can actually analyze your rooms revenue in more details, um, by revenue segment, by the occupancy, and also by the ADRs, right? And then you have number of guests, which is also segregated into transient, group, contract, complementary, and total guests. So these type of reports sometimes are generated automatically by the PMS, or it may not be included in the PMS directly, but you may have to calculate these reports separately, and these reports will form part of your financial operating package, which is going together with your reports. Then you have your per available room statistics. Usually per available room statistics are part of your P&L immediately. So so P&L can be of two pages. One is the absolute numbers, and then another one which is per occupied rooms. So this per occupied rooms is an important metrics to understand how the if certain expenses are fixed or not fixed. So the expenses, there's no clear definition of which expenses are fixed or variable, because it may depend on how the hotel's expenses are structured. For example, some hotels cleaning supplies can be 100% variable. For some hotel it can be 100% fixed. For most of the hotels, complimentary food, complimentary services, the guest supplies and the operating guest supplies are usually the uh, variable expense, means they will increase or decrease depending on the number of rooms occupied. But the other expenses can be fixed, like decorations or contract services, or usually contract services are fixed. Gas relocations or the transportation, those can be fixed or can be variable or can be ad hoc. Maybe they means they don't have a relationship with the guest rooms, occupied guest rooms. So that is the another statistic that you have to add into the reports. So we have you understand these terms, right? Already the ADR, which is calculated total room revenue divided by room sold. Here, room sold is only the actual room sold, means the paying room sold, not the complimentary room sold. So complimentary rooms are not included in the calculation of any occupancy statistics or ADR statistics for official purposes. So RevPAR is total room revenue divided by the rooms available. So the definition of what is the definition of available rooms available? So the rooms available basically. So here are the definitions. You will get this PDF automatically. So the definition of the available rooms basically is that these are the rooms which are not um, which are available for sale. So usually they are total room inventory minus the seasonally closed room. So during the period of let's say now during the now there is a raining in most of the resort destinations, right? So hotel might be closed for a period of more than 30 days and it's a seasonal thing. So every year you are closing around the same time. Then it become a seasonally controlled room. If you are just closing the room because of this year heavy raining and usually you don't close it, then it will not be part of your seasonally closed rooms. Means it will still be a part of your available rooms. Then you have extended closed room. Means if you are renovating a room inventory for more than 6 months, then it will be not included into the available room inventory. Now the question is, when you start closing, if you don't know, let's say there is a earthquake, right? Or a fire, and you think that you will be able to calculate the rooms in 3 months. So will you exclude it from the room inventory or you will not? Or you will wait for 6 months to be completed? What will you do? Be out of order, but they will still be part of your available rooms. Means when you calculate the ref par, it will still be calculated based including of those rooms, not excluding them, because out of order rooms are temporary out of order, means they are not calculated as not available for sale. So there is a difference between the closed rooms and out of order rooms. Out of order rooms, yes, they are not available for sale temporarily, but they will still be part of your available inventory, rooms available inventory. So when you are calculating the RevPAR or the occupancy percentage, it will be included in the calculations. There's a difference. It's not like you know that my room is my aircon is damaged for, and then it's gonna take a month to recover, to renovate or to repair the room. So you will be removing it from the inventory. That's not allowed by the usually. It needs to be out for at least 6 months. So usually we look at the intent, right? At the time of the closure of the rooms, what is the intent? Are we going to open next 3 months or are we going to open in the next 6 months? Right. So if let's say at the point of closure of the room, the intent is only to keep it only closed for 3 months, then you will not remove it from the inventory. But by the time if you revise your estimate and say, no, now we need to close the room for 6 months, then you will remove it from your inventory. So it depends on the intent, not based on the actual 6 months, actual passing of 6 months. And then you have rooms for permanent house use. So, for example, now because of COVID, yeah, you are going to close the rooms, right? Even though it does not say COVID, right? Examples include, so it says those rooms which are removed from the saleable inventory for a period of 6 months or more. Uh, so let's say because of the coronavirus, because of the pandemic, you see there's no demand for the rooms. So let's remove half of so we will open only half of the hotel. The another half we will remove from the inventory, means we will not be selling them, right? And the decision is there for, let's say, at least next 3 months or next 6 months. So if you have an intention like that already, then you can remove it. If you don't have an intention of removing them for 6 months, you say that we'll see next month if we are able to open the room or not. Then it will not be form part of your extended closed rooms. So it means those rooms which you have closed because of the pandemic will be included in the room inventory as a room available. So it will not be part of your extended closed rooms and will not be removed from the available inventory. So all your calculation will include those rooms as well. Well, because let's say for example, GM's bonus is based on the RevPAR, right? So definitely every out of order room he would like to remove it because the less available inventory means higher RevPAR. So means that if let's say his bonus is fit on the RevPAR that you need to achieve $100 RevPAR. So every out of order room or every closure of the room, he would like to remove it from the inventory. But as a owner or as the as a owners or as a finance, we have to follow the policy. So we cannot remove the room from the inventory just because it's closed for 1 month or closed for 2 months or closed for because there is no business. You can devise a plan that okay, I want to renovate the room for next 6 months. Let's close it down. But we have to see the actual condition. Is it really closed or not closed, right? So it normally the to remove this inventory from available rooms, owners keep a control. So there is always a document which needs to be filled up if the rooms is supposed to be out from the inventory. Then we have to we normally because for us we are the operator and also the owner, so we don't really do that. But if let's say now we are going to be we are gonna hire have an operator as a owner of the property or as a owner's representative of the property, I would ask the operator, whenever you want to remove any particular room inventory from the available sale, you have to get our approval first because whether we are going to renovate, whether we are going to close, is the owner's decision, not the operator's decision. Because otherwise, the statistic they can easily play the statistics. So if they remove it, right? So the RevPAR will increase, the occupancy will increase, everything is going to be higher than the normal. So
Mhm.
as a part of our control process, we don't want that to be happen. Then the other rooms which are permanent house use are also removed from the available inventory if they are occupied for more than 6 months by a hotel employee. But it has to be permanent, means the from the intent it has to be the manager's apartment, means they are not really part of the available inventory. So for example, in our resorts, we allocate one room for managers. But we sometimes send the staff from another hotel to work at that particular hotel, but it's not by intention that they will be there for 6 months, right? When we send them for a task for let's say 2 months 3 months. So it's not the intention of the owners to remove to use those rooms as a permanent house use. So we let them stay because the room is empty. But whenever we have a full house, we normally evacuate the room. I mean, we ask them to vacate the room and then we give it to the guest. So that's the criteria here for permanent house use is to see whether we can sell the room as a short notice or cannot. If yes, we normally would like to remove the room from the available inventory because that's we want to sell as much as we can. So the rooms which are not available to sell is only those closed, seasonally closed, extended close, or permanent house use. And the room in available will be room inventory minus the all these three rooms only. The other rooms will be part of your inventory, whether it's out of order for 1 month or 2 months or 10 months, doesn't matter. And then you have the room sold this will be actual room sold, but only exception to it is if the complimentary room is given as a part of contract or a paid contract, then it will be considered and to the into the room sold. Otherwise it will not be considered as a room sold, and that will be the and the occupancy statistics will be calculated accordingly. The other important definition, so here is the definition of weekend rooms, which is out of order or temporary closed rooms or unoccupied rooms, right? So here you will see the unoccupied out of order rooms is a part of weekend room, but weekend room are not part of any statistics. Basically, weekend rooms means that you could have sold those rooms, but you are not selling it. Basically, that's the meaning of it. So the other are not really the important definitions that are worth discussing about. So that was all about the rooms department. But now the understand important thing to remember here is as an accountant to calculate these you need to keep a control in these chart of accounts, right? So even though these numbers are available from the inventory from the pms numbers cannot be relied upon because they are keep on changing, right? You can change anytime. There's nothing like close the year and then you cannot change the previous years. So you always have every month you have to calculate these occupants room sold and occupied room, house use room, and everything else, and put into the your accounting system. So in most of the hotel accounting systems, there is a system for memorandum accounts. Means they are not like a debit credit accounts, their balance does not have to be tally. They are just memorandum accounts. Mean they will just create. They are just purposed mainly for recording the statistics, and that is used in the calculations when you are calculating the other statistic, and it will become part of your profit and loss statements. So you have to keep that in mind whenever you are designing a accounting system or chart of accounts. So you have to keep these accounts as well in your chart of accounts.